All right, everybody. I think we are slowly coming live. Um, but yeah, welcome if you're tuning in to this. Just making sure that it comes on all the platforms that we're on today. But yeah, welcome to this new format, 21 on, where we have very quick sharp discussions for 21 minutes, entirely in the spirit of Bitcoin, to really dive deep into a topic that matters for investors, of course, while sticking to informational purposes only. And yeah, to summarize maybe the topic in one sentence, right? So Europe has two main access routes to BTC, right? And these are ETPs, right, exchange traded products, and Bitcoin treasury companies on the other hand. So maybe to just start with some definitions, so we have everything right. So the ETP is essentially a listed product or an exchange traded product tracking BTC, right, with BTC underlying. And a Bitcoin treasury company, on the other hand, is a company that has BTC on the balance sheet, and yeah, that basically has operating and financing layers to amplify that BTC and grow BTC per share. Now we're in a very interesting market environment. I think we can touch on that too. I mean, we won't go into that specifically, but if you're watching this back, Bitcoin just slipped from about 85, 90,000 to now around 66,000. So yeah, we will see when the bottom is in. But I think this volatility also says a lot about which product to choose and why. But yeah, discussing it is well, we have two people both from the ETP world and myself from the Bitcoin Treasury world. I run Bitcoin strategy at Treasury, which is an emerging Bitcoin Treasury company from the Netherlands, focused on the euro-denominated market. And Duncan is president of 21 Shares. So maybe Duncan, you want to briefly introduce yourself and share why 21 Shares exists and what you do.
Would love to. Look, thank you so much for having me on, Tycho. And yeah, what a day to be doing it. I've got this all the markets up right next to me, so I'm trying to keep one eye on them. But yeah, like thanks again for having me. As you said, I'm president at 21 Shares. This is probably the one of the only kind of podcasts I can come on and not have to explain why we're called 21 in our name, I guess. But just for the people tuned in, 21 Shares is Europe's largest crypto asset management firm. We specialize in cryptocurrency ETPs and ETFs. We've got about $8 billion today, and something in the range of around 57 products globally. But the first in the market to do physical Bitcoin ETPs.
Yeah, and maybe just to start off with, right, like what problem are ETP solving for
Yeah,
investors?
happy to share. So, I guess like I would like high level characterize it as or summarize it as access. We started in 2018, and really trying to solve for that problem of more traditional investors who wanted to come into crypto, and it wasn't always easy. They wanted to get exposure to the asset class in the same way that they would buy a stock or a traditional fund. So it's really about bridging the gap between the crypto world and the traditional finance world, and on top of that, you get a ton of benefits along the way.
Mm. Yeah, so to summarize, like an institution or an allocator who buys listed, assets, essentially wants BTC exposure, and that's like that was like the way they could get it for the first time in 2018.
Yeah, institutions, like honestly, retail as well. Like in Europe, where about half of our assets are, half of our clients are retail. Not a lot of retail don't want to use a crypto app. They don't want to go on DeFi. At least now. Maybe that will change in the future. The worlds are really converging, right? And in the US, something in the range of about 70% of our clients are actually retail. But it's ease of access and then also security as well. People don't necessarily want to leave their investment on chain or on exchange, sorry. They want safe custody of their assets, and ETPs are one way of doing that.
And maybe just one other thing to clarify about ETPs before we go into kind of the the discussion or the meat of the
Yeah.
of the topic. Like, why do European ETPs exist when there's also a BlackRock ETF in the US?
Oh, well, European ETPs were first. Maybe I'll start with that. But the ETPs exist because, and maybe I should start by saying like ETPs technically is the catch-all term for ETFs, ETNs, ETCs. But typically when we say ETP, we mean like an exchange traded note. So that's a debt instrument, a promise to pay, that trades on regulated securities exchange. And in Europe, that's the structure that we use. The reason being that ETFs in Europe tend to be UCITS. They're not all, but say 99% of them are UCITS. And you can't today create a UCITS crypto ETF. So the ETN or the ETP is the structure of choice. And like one of the things, Europe might not be the best at everything in terms of financial innovation, but one thing they got right was that note structure and the wide accessibility of it. Switzerland, I think, has really led the way. That's why we're headquartered in Zurich, and it's a great instrument for providing kind of broad access to a range of strategies.
Yeah, no, awesome. And yeah, and then maybe to sort of spice things up, right? So there has been this ecosystem of ETPs in Europe, right? Also, I think important to note that the US Bitcoin ETFs are not accessible to EU retail investors, right? And that's also like partly the thesis that we have here, like behind Treasury, right? Creates a euro-denominated Bitcoin treasury company, right? People can buy it from their brokerage account, and in that sense, get exposure to BTC because that's the underlying asset, right? That sits on the balance sheet of Treasury. Now there have been other treasury companies kind of bursting onto the scene in Europe. What does that look like from a 21 Shares perspective? Is that competition? Is it something different? Like how do you guys think about that?
I think it's probably competition in some sense, in some parts of the market. I think generally speaking, competition is good. It's certainly good for the end investor because ends up creating better solutions for them at a lower cost. But I think about the UK as a good example. So the UK market was pretty restricted from a crypto ETP perspective. Retail only got access a few months ago. And before that, the treasury company stocks were some of the most traded stocks on platforms in the UK. So they really were the access route for a lot of UK investors to crypto, particularly retail investors. So they served a real purpose and added value there. And as far as some more general competition, the way we see it, although there are more retail investors to come into the space, we see more institutions coming in. Most likely, the ETP will be preferred over that in our the treasury company, in our opinion, at least in the short term.
No, interesting. And I think this is also kind of where we can really start breaking things down, right? So like on the one hand, there is the ETP, right? Exchange traded note, underlying BTC, and then the treasury company, right? Like an equity or a stock with an BTC accumulation strategy underneath, right? That also essentially like mirrors BTC exposure. So maybe to like kind of put them side by side, in like a clean way, right? Like how to think about the different instruments, like what does one have that the other has, and sort of how do they differ? Of course, like the ETP gives you very pure exposure, right? It's usually essentially one-to-one, right? Or I guess there can also be ETPs with multiple tokens in them. But if you just look at a clean Bitcoin ETP, it's one-to-one. There's usually, of course, a management fee, right? So there's like a small amount per year, I guess that's, of course, keeps the lights on at 21 Shares. And then in a treasury company, on the other hand, there is like, it's a company, right? So there is a team, right? There is people well, people like me, people like King, the CEO of Treasury, and other people who are essentially, doing a strategy not just to hold the BTC, but also to, grow the BTC per share over time. So you're just kind of like, said that well, some institutional investors will prefer ETPs, but maybe just to break it down, like what obviously I have my opinions about that too, right? Like I think a lot of institutional investors will like equities a lot because that's their
Sure.
largest bucket of investing in, and that's what gives them that equity like exposure with quarterly reports and all the things that they are used to. But if you would put them sort of side by side, let's say I'm an investor coming to you and
Yeah.
I'm just like, hey, I want BTC beta. How do I do it? What should I go for?
Well, first of all, we'll gladly take your custom, sir. So feel free to come to us. But look, I think if it's a pure Bitcoin exposure, um, although I might be biased to our own sides, I think we're probably intellectually honest enough to kind of be fair here. I think that the ETP is the right route for most people. Just if you want it to be simple, low cost, easy to access, and have all your investments in one place through traditional means, I think it's the most straightforward. Um, if you want something a little bit different and you want additional value, I mean, if I take the other side of it, one of the things about ETPs is that they are rules based, so they are quite rigid in their construction, and so you cannot have really discretion. It's far harder to have discretion in the allocations. Um, Whereas obviously with a treasury company, much more flexibility, and I think that's actually a real added value of the asset. Maybe just pick up on one point you said before about institutions having, assessing equities. I completely agree. Actually, I mean, the way I would think about it is, let's say a tech investor or tech focused, hedge fund or asset manager. Yeah, maybe a treasury company is probably the right, because they're used to assessing equities and doing fundamental analysis on a company. They're used to interviewing management of a company and taking a view on how they're going to run it. I think that actually plays really well into the treasury company story. Um, with the other institutional investors, most likely if they're looking at alternatives, they put crypto into an alternatives bucket. They're used to allocating to vehicles, and so they're not necessarily looking at a company itself. ETPs probably feel more familiar to them.
Mhm. And how would you sort of separate those things out, right? So the amount of investors looking for that kind of ETP exposure through alternatives slash, the ones looking for that kind of equity exposure. Do you think there are different types of investors, are completely different
Yeah,
profiles?
yeah, for sure. I think private banks, wealth managers probably would lean towards the ETP. I mean, certainly that's what we've seen. Like half our assets are, when I say institutional, it's like family offices, wealth managers, private banks, hedge funds, and prop desks largely is the institutional category, and so they prefer to go down the ETP route most of the time. Um, but I think as more investors come into the space and bigger institutions, yeah, you could see the equity funds start to look at treasury companies. They probably will not look at ETPs as much because it's a different type of instrument to what they're used to.
Mm, yeah, yeah, exactly. Because yeah, that kind of brings me to one of these quotes by, Michael Saylor, right? Like the, founder of Strategy, largest Bitcoin treasury company, who just kind of like keeps saying this thing, which is, about 95% or 99%, he sometimes says, of all capital in the world is mandated to invest in equities and in debt, right? Or in bonds only, right? And that's of course the kind of capital that a Bitcoin treasury company can
Yeah,
attract. But then also I think it's important to really be aware, right, of okay, what is actually the difference between just buying BTC, right, or say something like an ETP, or buying a treasury company? Because essentially when you buy a treasury company, um, because it sits on this equity access rail, right, the bet partly there is that um, yeah, essentially, there are investors that can access the treasury company that cannot access the ETP. And the what we've seen with strategy in the US is that it's like a very large pool of capital even after the ETF is launched that can access the treasury company stock, that can access MSTR, but that can't access, maybe IBIT, right? The BlackRock ETF in the US. So maybe that's mind-boggling to an individual investor who just allocates their own capital, but that's the reality. But then the thing is that I think is interesting about that in investing in a Bitcoin treasury company is that when you say buy MSTR, you essentially you're to some extent in a way almost front running the flows right, that come from these from these investors that can only invest in equities, right? And the same thing kind of goes for their preferred instruments, which focus on the bond market. So there's that very
Yeah.
well reflexive nature, right? That's kind of built in, which is also kind of a bet on future Bitcoin adoption in a way, or upside from further Bitcoin adoption.
Yeah, that's a good point. I mean, basically, when you buy it, you're providing equity financing to the company, and then they're going to go out hopefully and buy more of the underlying. So, yeah, I didn't think about that kind of front running. I mean, what do you think about the if we take like a company that just buys and holds versus a company that does something different? I'm kind of interested in that, the debate around MNAV, and to a lot of people say, oh, well, the MNAV drops below 1. So, like the value of the market cap or the enterprise value is divided by the underlying assets is below 1, then that's not a good sign. I don't know. I'm interested in your view. Is that like the right way to think about it?
Yeah, I think the MNAV is very important, right? So essentially, like the multiple to the net assets under value,
Mhm.
or essentially that the net assets or that the company trades above the Bitcoin assets that it holds. Yeah, I think that's incredibly important because that's essentially I think that the reason largely to hold Bitcoin treasury company is that it accumulates Bitcoin per share over time. So that needs to be Bitcoin per share growth, right? That needs to be shown there. And of course, running a Bitcoin treasury company has real costs, right? I mean, there is a team, there is compliance costs, right? To be able to run a public company, right? Like these things are not free, right? There are lawyers involved, all these kinds of things, which are much higher costs essentially than running an ETP. So that higher cost needs to be justified with higher growth of Bitcoin per share. So yeah, that's definitely like incredibly important. And essentially the treasury company should have some kind of amplification factor, right? So
Yeah.
it should be doing something that amplifies the exposure. Now the very interesting thing in Europe is that there is a huge fixed income market, right? That also Sailor is tapping into with the STRE issuing, right, which is their euro-denominated preferred instrument. But there are other paths too, right? Generally having a Bitcoin income generating business, for example, to grow Bitcoin per share, generating yield on the underlying Bitcoin, right? Essentially finding yield opportunities in the Bitcoin ecosystem that the individual investor like can't find, right? And there, I think also the discussion, with treasury companies of other tokens is quite interesting, right? Like you see kind of what BNMR is doing right now, versus just holding Ethereum, right? The exposure is diversifying a lot. Now I think they're maybe going further on the risk curve than a Bitcoin treasury company ever will, and that makes a lot of sense because there's very different token and different community, different ethos. But yeah, fundamentally, that Bitcoin per share growth is really what it's all about.
Yeah. I think like the Bitmine's interesting because they are definitely doing something different, like Mr. Beast in investment. But it's a little bit also about marketing. I mean, they're actually, I think, way above on, or at least I don't know. I haven't checked today, but on like the MNAV, but the multiple. But to me, if you buy into a company, you buy into the management of a company and what they're going to do. like a discounted an MNAV below 1 is an opportunity to me. It shouldn't be viewed as a negative if you really believe in the management and they can deliver on it and they can get the brand and the name out, as well as all the underlying things they have to deliver on. To me, it's a buying opportunity.
Yeah, no, absolutely.
Not financial advice.
No, yeah, it's a buying opportunity for the right teams with the right, the right companies with the right management and the right priorities. So, but yeah, I think we're slowly coming up on the end of our 21 minutes. So maybe to quickly, summarize, right? So if you want just a clean BTC exposure, right? The ETP is there for you. If you want equity style optionality, that's where the Bitcoin Treasury company comes in and essentially benefit from the growth of Bitcoin adoption in an equity wrapper. And yeah, maybe just the final words, like where can people find more about 21 Shares and about your work?
21shares.com, and you can follow us on YouTube, X, and LinkedIn primarily.
Yeah, fantastic. And yeah, make sure to follow Treasury on X or on LinkedIn or on YouTube, depending on which platform you're on. And I've put my Twitter handle here below at Tycho Anash, and to stay up to date on all the developments of Bitcoin in Europe. And yeah, with that, I think great session. Thank you very much. I think we've
Thanks, Tycho.
really managed to dive deep and synthesize this one. And yeah, then we'll chat soon.
Pleasure.